Hey, this is Shade and Steve with Tax Sale Support, bringing you the Tax Sale Secrets weekly update for the week of February 19th to the 26th. So we're just going to quickly talk about a couple of different news announcements. We're going to bring up the upcoming tax sales that are taking place, along with some properties we can look at. And for the tax sale tip, we're going to talk about redemption deeds, followed by investor Q&A.
Yeah, exactly. For the last couple of months or so, we've been doing these every Friday, and it works out. So just plan on every Friday us doing another one of these updates with relevant tax sale tips and important information.
Yeah, now, if you'd like to join us for a free Saturday morning online workshop, we're going to be doing that on March 3rd. You can go to secretsoftaxlieninvesting.com to sign up there for the free webinar. You can also download our free ebook at Secrets of Tax Lien Investing, or if you'd like to become a member of TaxSaleSupport.com, you can do that for just $29 a month.
Yeah, exactly. And all of the links to these different things are down in the description. So if you go down in the description, you click on any of the links to join the webinar, to join the online workshop, or to download the ebook.
Yeah, it looks like we've got some sales coming up here in the coming week here in a number of places in the country.
Yeah, there are some pretty good auctions coming up. What we try to do is just focus on some of the best auctions or some ones that have a lot of property. On February 20th, next week, next Tuesday, Lee County, Florida has a big online auction. Same as Walton County, Florida, and Achalua. So there's three big counties in Florida that are holding a pretty good sale. On the 21st, there's some tax lien certificate auctions happening in Indiana, in Montgomery, and Posey. And then, of course, Citrus has an online sale in Florida as well. Then on the 22nd, Orange and Brevard County, Florida, are going to be holding online auctions. And then we have another one of the certificate sales for Indiana. And then on the 23rd, there's an online auction happening for bid for assets for Contra Costa County, Florida. And then Shasta County, California is actually going to be having a live sale there at the county courthouse. And same goes on the 26th on Mason County, Washington is going to have an online auction with bid for assets. And then Santa Rosa County is going to be having their online sale as well. So we try to do online sales as much as we can, include those, just because that is an auction that everyone can participate in regardless of where you live.
Yeah, I think online auctions are certainly the future. We also wanted to bring up and just show a couple properties here. We'll show a few more here in a minute, but we wanted to show some upcoming opportunities or deals that are basically out there right now. Now, something that both of these properties have in common is that they're both located in the same state, and it's a state that utilizes something we call redemption deeds. So what we're looking at here, you can see, are properties that are going to start out bids of $3,600 and $4,900, but that have a value, that's closer to 67 to 100, 100,000 plus. So, real value there. Starting off with the low bid to value ratio, it hits all the right points.
Yeah, exactly. I mean, both of these properties essentially are starting around about 10% of the market value, give or take some. And you're both looking at single-family homes. And one thing we'll talk about when we get into Texas is a little bit different with a redemption deed than a tax deed. But, when you're looking at redemption deeds, you're really looking at and researching them more like a tax deed.
Yeah. In fact, redemption deeds are unique. I would say that more than 20 years ago, there wasn't such a thing as redemption deeds. It's kind of a term that we coined because we didn't have a way to explain them. We've heard other people describe them as hybrids or hybrid states. But really, the best way to describe it is, I think, like this. Redemption deeds are one of the three property tax enforcement systems that are used in the United States. So really, those are tax liens, tax deeds, and then these redemption deeds. And we know that they operate in a handful of states. They're not as big as some of the other systems, but states like Texas, Georgia, Hawaii, Tennessee, Connecticut all use them. So let's talk for a second about what a redemption deed is.
Yeah, exactly. And when it comes to those redemption deed states, really Texas and Georgia are probably the most familiar or largest ones that are used. Redemption deed is really just a hybrid of tax liens and deeds. It's really a tax deed with a redemption period attached to it.
Yeah. In fact, uh, normally when you buy tax deeds, you basically buy the property free and clear, and it's yours. The only real difference is, like Steve said, there is this redemption period that is attached to it. Now, what that means is immediately after buying the redemption deed, you couldn't turn around and sell the property the way you could with a tax deed until a redemption period passes. And that redemption period is generally less time than it is with tax liens normally, but there's still a time period that you have to wait out, which means that there's a chance for redemption or for it to not redeem. Um, which is one of the things that makes redemption deeds different, is there's still a chance that you could end up having the property redeemed, but when that happens, you get paid out what's called a penalty, which is a flat rate of return rather than one that accrues with interest. So if they were to pay you off, you get a good flat rate of return of, for instance, Texas has 25% annually. So any time in that first year that the property were to redeem, you would make your initial investment plus a flat 25%.
Yeah, exactly. That's one of the advantages. If the property owner does redeem, you're going to get that flat penalty, and so if they redeem early, that can even increase the amount. Kind of what separates it from a tax lien is with a tax lien certificate, 95% of them are going to pay off. When it comes to these redemption deeds, the number that pays off ends up being a lot different. I mean, usually, 40, 50, 60% of those properties may redeem, but you have a lot higher chance, probably a 60 or 70% chance of getting that property. So kind of what they've done is they've kind of created a deed on the property. They just haven't recorded it yet with the county. So it isn't completely, certified until that redemption period is over.
Yeah, I think these are all really good points. Now, redemption deeds are sold similar to regular tax deeds. They're sold using a premium bidding system where the high bid wins. Essentially, your opening bid's going to include everything that's owed on the property at the time, but it's a standard bidding system for the person that wins. So all of that is pretty familiar. Now, like Steve mentioned, some key points on redemption deeds are that they have a higher chance of, investors have a higher chance of acquiring property than they would with, say, something like tax liens. It's much higher because fewer numbers of those are going to redeem. It's also more money that's required in order to redeem the properties, which I think makes it difficult. But because you have a higher chance of acquiring the property, the due diligence necessary is similar or equal to what you would do with tax deeds.
Yeah, exactly. I mean, if you have at least a 50-50 chance, if not better, of acquiring the property, then you're going to want to do your due diligence beforehand. Unlike a tax lien certificate, really in a matter of 5 or 10 minutes, even less, me and Shay can determine if a good tax lien is worth investing or not. When we're talking about redemption deeds, you really need to kind of do the full due diligence like you would with a tax deed, because chances are you're going to acquire it. Not only that, you're not paying just the back taxes; it's being bid up like a regular premium auction. So Shay could bid 3,000, I could bid 4,000, Shay could bid 5,000. We can go back and forth into whoever's the high bidder. And so because of that, you want to really know exactly what your numbers are going to be, so that you don't make a mistake and overpay for a property.
Yeah. Now, the redemption period themselves is similar to the way it works with a lien. The redemption period is essentially the time period that the state law grants the property owner to pay off what's owed before they risk some kind of, some type of repercussion for that. And it basically outlines the time where they'll lose their property. Now, a couple things that are different about redemption deeds is during that redemption period, you can actually maintain many property ownership rights. So, in other words, you may not be able to sell the property as soon as you buy it, but you may be able to take possession of the property, or even use it during that time. While that redemption period's occurring. The only difference would be if it were to suddenly redeem, you'd want to be prepared to walk away.
Yeah, exactly. Texas is unique like that, where you'll actually have ownership rights once you essentially attended and purchased the property at the auction. So you could live in the property, you could rent out the property. The only thing you want to avoid is putting a lot of money into the property. There are some things that the property owner may be required to pay certain type of maintenance fees and upkeep and certain things like that before acquiring the property. But if you put a lot of money into rehabbing the property, there's still a chance that the property owner could redeem the property. So that's really the only thing you'd want to avoid, is putting a lot of money into it until that redemption period is passed. And like Shade said, the redemption periods are shorter. Generally, all the redemption periods are going to be less than 1 year, except for in Texas, they're going to have 2 years for only homesteaded properties and for farmland. And so that's usually just a small percentage of those type of properties that come up for sale. So all other properties, essentially, you'll own it within 6 months or get your money back in the 25% return.
Yeah, in fact, in Texas, when the redemption period passes, what happens is the county will just record the deed in the county records. But in other states like Georgia, when that comes to an end, you need to basically foreclose on the property at the end of the redemption period because that foreclosure hasn't been completed there. So it really varies. It depends on the state you're working in. Here's a couple other examples of some more redemption deed properties here. And again, you can see that they have an incredible bid to value ratio on all of them. We've looked at, really, these have all had bid to value ratios that have been closer to 5% than 10%.
Yeah, exactly. You can see that property on the right. It's a more expensive property, $32,000 opening bid, but you're looking at a property that's worth almost $600,000. And so, even if you were to pay $100,000 or even $150,000 for that property, or $200,000, it'd still be $300,000 to $400,000 worth of profit in just that property if you were even to pay $200,000.
Yeah, the numbers are incredible. Lots of profitability in it. Now let's go to our investor Q&A section here, and this is a question that we received recently from Rashawn. What they're wondering is it possible to purchase a tax deed property before it goes to auction by purchasing it from the owner? Is there any risk, or is that a good strategy to use to acquire property?
That's a great question. It's something that we call in our home study program the pre-foreclosure system. Essentially, what you're doing is you're contacting a property owner that has a property that's coming up for sale at a tax deed auction, and you're trying to acquire that property before it comes to auction. So that's kind of the strategy that this investor is asking about. One of our members is they wanted to know, hey, can I approach these property owners and buy the property before it goes to auction? And that is a possibility, and but there's some things that you need to watch for. There's some drawbacks to it, and really it's about the foreclosure process.
Yeah, the foreclosure, the judicial foreclosure that these properties go through prior to a tax sale is a powerful foreclosure. The pre-foreclosure concept is something that became popularized through bank foreclosures. People would see that they could approach different property owners that were in distress situations, and if there was any equity in the deal, they could figure out some kind of an arrangement, and you could do the same thing with other property owners. But the problem is if the property hasn't been through that foreclosure, then any types of encumbrances, liens, judgments against the property are still there, and you don't have any kind of protection from that. And so you'd have to be pretty careful about the condition of the deed and what might be attached to it if you're buying it from a property owner before a sale were to take place. Whereas if you were to buy it at the sale, all that stuff has been extinguished through the foreclosure.
Yeah, exactly. That's really your only risk. If you can find a property owner who's willing to sell the property and doesn't have a lot of liens or something like that that's going to affect buying it, then that's a good strategy to use. But a lot of times these properties will have other things like judgments or mortgages or different types of liens against the property. And that's one thing that's nice about that foreclosure process, is it's going to eliminate any of those type of problems against the title. The only thing that could ever continue is just some other type of governmental lien.
Yeah.
And so if you're doing that strategy, or if you're using that strategy, you really want to even spend more time researching past liens and things like that to make sure the property's free.
Yeah, in fact, really, you'd probably want to do a complete title search, before you were to buy it in that way, so that you were aware of everything, with the property, because there certainly is more risk. A lot of the trust that we have in the properties that we buy is because of that judicial foreclosure. If it wasn't for that judicial foreclosure, we would feel like we were trying to avoid landmines everywhere with investing. But because of that foreclosure, we know that, that the properties are basically free and clear, with the exception of small things that could be attached. So
Yeah, it just takes the only thing we need to worry about when we're looking at a tax deed is not is there a mortgage or is there some past judgments. We just need to see is there any governmental liens like a grass cut lien or something like that may affect it. When it comes to this, on the other hand, you've got to research everything. Everything could be important.
Yeah. So it's certainly something that could work. Although we tend to focus on the properties that are available at the sale, we do know that there are pre-foreclosures taking place.
Yeah,
So,
and we've helped people do it before in the past, but us personally, we just kind of like to stick to the ones that are all done and not really work with the owner on it.
yeah, that judicial foreclosure is our friend. It's really one of the best benefits, I think, of tax sale investing is that judicial foreclosure. So thanks for joining us here for this weekly update. You can check us out using any of the links below, or you can go to taxsalesupport.com, secretsoftaxinginvesting.com, or you can check us out on Facebook.
Yeah, exactly. Don't forget to subscribe, and we'll look to put out a new video again next week.
See you then.